Hello and welcome. You tuned into Buy Now, Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next 1 hour, we'll get all your stock-specific questions answered on our show by our experts. But first up, let's take stock of how the market is shaping up at this juncture. Kanishka, we thought that all the negatives of the Trump tariff has been priced in. Now with additional, a 50% tariff that has been levied, the markets are really showing signs of weakness now because we have broken below the 450 levels on the both Nifty Bank right now trading at the lowest point of the day.
That's right, Ankita. Remember yesterday also we did have a gap down opening, but it was fairly resilient, same as today. But at this point, yesterday in the show, we were at the day's lowest point. Similarly, today as well, Nifty is at the lowest point of its in the day today, trading more than 160 points lower at this point at that 24,400 level, down from that 24,500 level that we did manage to reach earlier in the day, but we're off those levels now. Sensex also down about 0.6% at that 80,040 level. On the other hand, we have Bank Nifty that is also down about 0.5%, trading around that 55,100 level. Now, if we take a look at, the top losers that are contributing to the downside on Nifty, it's Adani Ports, Tata Motors, Adani Enterprises, Shriram Finance, Jio Finance, and Bajaj Auto. Despite that inline set of numbers that we saw yesterday coming from the company, it continues to trade in the red, contributing to some of the significant losses on the Nifty. On the other hand, very few names that are limiting the downside there. For instance, Hero MotoCorp that did deliver a good set of numbers yesterday and is trading just about 0.8% higher. ITC, on the other hand, HDFC Life, Power Grid, and Titan, just trading flat, but still managing to hold on to the greens ahead of its results. So, very negative setup. In terms of sectors, of course, all sectors are in the red. Only Nifty Media is holding on to the green, just about 0.5% higher. In terms of other sectors, all are in the red, with metals and autos leading the losses. So that's how the market setup is looking like right now.
All right, weakness coming in across board right now in the market, but let's get on board on experts then. Sharon Lenani, who's the market expert, and G. Jokalingam, founder and head of research, Equinox Research, joining us. Hi, good morning to both of you. Thank you so much for joining in. Before we get started with all the queries, stock-specific questions, let me come to you about, how the market is shaping up, Sharon, because we have broken below the 24,450 levels on the Nifty as well. So all the major support levels have been broken now. From here on, what are the levels? What are the important levels to watch out for?
Good morning, Ankita. Good morning, Kanishka. Good morning to the viewers. Definitely on back of the tariffs, we are seeing some kind of negative reaction. Now, Nifty is trading below that June low of 24,473, which I was expecting it to hold. It showed some upside in the morning, but has totally given up all gains and now trading at day's low. Now, the support was around 24,450 to 500, but it's definitely trading at 24,400 below those levels. The next support for Nifty now comes in around the 200-day EMA, which is around 24,200. So you might see Nifty maybe slip down another 200-300 points slowly in a very consolidated manner and take support around the 200-day EMA. Now, definitely, since it has broken, the immediate resistance for the Nifty becomes 24,550, 150 points up from the current level. So we might see some kind of downwards kind of reaction in a consolidated way in the next 3 to 4 or maybe a next 1 week trading session.
All right, so a little bit more downside likely for at least about a week going forward. But now let's get started with all the queries then. Requesting our viewers to share their stock-related queries on WhatsApp. The number is flashing on your screen. So do write to us, get your investment analysis on your holdings, tips and buys, fresh buys in the market. So write to us ASAP. Well, don't forget to mention your name, your stock's name, the query that you have and your holding time horizon. So let's get started with all the queries then. Sharon, let me come to you first. This query is from Partha, who's a senior citizen from Kolkata. He has queries about 3 questions. First is Amara Raja. He has purchased 190 shares at a price of 1,127. He wants to know what's your view on this. Should he buy more at the current market price? Similar situation with Tata Motors. His buying price is 832 rupees. And the next question is on Praj Industries. He has purchased the stock at a price of 330 rupees. He wants to know what's your medium-term outlook. Should he sell at this juncture and book profits, or continue to hold for the medium term?
So Kanishka, let's start with Amara Raja battery. It's looking very weak on the charts, trading below all its moving averages. Since a very long time, longer term perspective also, it's actually on a downward descending move, making lower lows all the time. Again, today it's breaking below its previous support. So the next support for the stock comes in around 920. If that breaks, even you can see levels of around 830. So for Amara Raja, I don't see any kind of decent upside coming in anytime soon in the stock. So I would suggest an exit on the stock. For Tata Motors, again, quite a bit of negative impact on back of tariff news. Even the company's commentary was not that great. I think instead of Tata Motors, I would suggest him to switch to a Hero Moto or a TVS Motor, which is showing decent set of numbers. Growth in their two-wheeler segment is decent, especially the EV segment. So at this point in time, Tata Motors is also very weak on the charts, given a breakdown. So a switch strategy would do great. You can do 50% TVS, 50% Hero Moto, and exit from Tata Motors. And Kanishka, what was the last stock?
Praj Industries.
So Praj, again, very, very weak on the charts. I think it's on a verge of a big breakdown, again, on a lower low, lower high kind of pattern. So don't expect any kind of up move. It has decent support around the 440 levels. If it breaks that, you can see new lows coming in the stocks around 390 to 350 levels. But on the chart, it is looking very weak. There is no accumulation at any kind of level. On the higher levels, always it is witnessing selling. So Praj is also an exit from my side. There are much better stocks, very good stocks available at a discount because of the downside in the Nifty currently. So do exit and look at good sectors, especially autos, PSU banks. Some of the pharma names can also continue doing good. So please switch to these stocks where you can recover some of your losses.
All right, so that's the view that Sharon has on these counters. But let's move on to the next counter, and the next question for the is coming in from Ignatius. He says he's holding 10 stocks of Trent at a buying price of 6,361. He wants to know if he can average in. He's been holding Trent for the last 6 months. Mr. Chokalingam, let me come to you for this. Trent has come out with its numbers. It has actually given a beat on what we were expecting. Now, remember last time when Trent came out with its numbers, it was a major disappointment, and thereafter the stocks saw some drubbing, after its results. But this time round, it has been an upside surprise coming on Trent. So from here on, what do you see for Trent, and how should one look at this counter?
I would sell Trent. It's a great company, part of great management. But if our profit is growing, around 9-10% year on year, I don't see any reason for giving this kind of phenomenal P multiple. So I would give a sell call on Trent.
Okay, so that's the view on Trent. But moving on, this is Satyan writing from Palakkad. He's holding 110 shares of Berger Paints at a price of 573 rupees. He can continue to hold for another period of 1 year. Mr. Chokalingam, if you could give him your view on whether he should continue to hold or sell at this juncture.
He can hold, but if there is any small improvement in the stock price, one can sell, because all of us know that there is a massive structural change happening in the paint industry. The new capacity which is going to come from Jindal and Birla Group alone is going to be 50% of the existing capacity. So it is definitely a massive structural change. It is going to keep pressure on existing players in terms of growth and margin. Still, I would say that hold in case its stock improves 5-10%, one can exit, because along with the tariff war, the oil price also falling quite badly. OPEC is also increasing the oil supply in September. So this would mean there is a possibility of improvement in the operating margin for paint companies because of expected fall in the raw material cost. So therefore, hold, exit if it recovers 5-10%.
Moving on to the next question then. This one's coming in from Manoj from Chennai. He is writing about Karnataka Bank. He says he has 500 shares at a buying price of 2,200 rupees, I beg your pardon. He wants to know if he should be holding on to it or he should start booking losses. He's sitting at a loss, Sharan. What should he be doing with Karnataka Bank? What are the levels that he needs to watch out for?
So Ankita, it's a direct exit from my side. Stock is looking very weak, seeing significant selling back to back, I think 20, 30 days of non-stop selling. I would suggest switch to a Canara Bank or an Indian Bank or a Bank of Baroda. Be in the PSU pack. I'm really liking the PSU pack. You will recover some of your losses over there. I will not suggest that you'll recover all your losses, but being in this bank, I see much more downside coming in for the 165, 150 levels also. So exit it today only and shift to a Canara Bank or an Indian Bank or a Bank of Baroda. All three are looking decent. And once the Nifty recovers, you will see a good recovery on these stocks.
All right, so those are some of the banks you could look to switching to. But on
the questions answered, the number is flashing on top of your screen. Please send in your questions, your stock's buying price, your holding period, and your query, and we'll get them answered by our experts who have now joined us. Let's resume with all the questions. Then you us. This is by Deepak Dave, who's a senior citizen. He's writing from Gandhinagar. He wants to know that he has a Nestle at a buying price of 2,435 rupees. He wants to know if he should be holding on to it or should he be exiting. Mr. Chokalingam, let me come to you for this. He's a senior citizen, and at this point, because of all the tariff news that's been, the uncertainty that's been going around, the consumption pack or the more domestic facing FMCG pack is turning out to be a bit of a safe haven. Is Nestle a good hold at this current juncture? Should he sell out?
Yes, slightly safe haven, but then this time was different. The FMCG companies have failed, including Nestle, to act as a defensive when the market was going down in February. Once again, started correcting from July. Going forward also, it might take more than 2-3 quarters for FMCG companies like Nestle to improve the growth significantly. So I would prefer, Mahindra and Mahindra in the large cap because it is beating the competitors by big margin in automobile business. It is also beating the second largest player in the tractor business. So that gives me a lot of confidence in terms of being defensive as well as giving growth prospects.
All right, so those are some of the stocks to track in the consumption space. But moving on, this is Snigdha writing from Delhi. Sharan, Mr. Chokalingam, questions for both of you. Now, from a 2 to 3 year perspective, is L&T a good buy after that strong result that we saw coming from the company? And what are the levels to watch for L&T? Mr. Chokalingam, you go first.
Yeah, certainly it's a great stock for medium to long term. If you see last 4-5 months, the kind of orders it is securing is amazing. The cumulative order on hand also fantastic. It's also diversifying into new energy in a big way. The only concern is the IT segment, but that segment has come down to now 1/3 of the total consolidated profit. So therefore, 3/4 of the profits are coming from other verticals which are promising. So I believe it's a great large cap stock for medium to long term investments.
All right, so great large cap pick. But Sharan, now coming to you, what would be the levels to track for L&T? Could you suggest a target?
So Kanishka, I think it's a great infrastructure play. As said, if you want to be in the infra space, you have to go long on L&T. I've just given a buy call in the morning. It's looking very decent for the long term. It has a small resistance around 3,700 level. I think once it takes down that, you can easily see an all-time high coming in around that 4,000, 4,100 mark. So if at all anyone has a long-term view, I would say definitely stick to L&T. And if it starts moving above the 3,700 level, I think you can start adding onto your position for a target of around 4,000 to 4,100.
All right, L&T, a strong play from the pack, definitely, and it's a hold or a stock that can be a hold for the longer period of time. But let's move on to the next counter. This is coming in from Ekam Baria, who's writing in from Hyderabad. He says he has Dr. Reddy's at a buying price of 1,230 rupees. He wants to know if he should hold on to it or book losses. He's looking for a long-term view. Mr. Chokalingam, what is your view on Dr. Reddy's? Now with the pharma coming under scanner on the back of tariff uncertainty, what would be your long-term view on Dr. Reddy's?
I am a little concerned about, as you rightly mentioned, about the tariff because Dr. Reddy has got a sizable exposure to US market. We don't know what Mr. Trump is going to do for Indian pharmaceutical exports. So therefore, for long term, I would take a little bit of risk in my view. I would sell Dr. Reddy because we already given a sell call also and buy a small cap stocks like a FDC Limited. Personally, also we have invested. We have a buy coverage. I have a strong conviction because 82% of the businesses are from the domestic market. So my strong recommendation is to move towards domestic demand-driven segments and stocks rather than taking any risk on businesses which have a sizable exposure to US markets.
All right, so you could look at, some plays in the domestic pharma space instead of Dr. Reddy's. But moving on, another query. This is this is Sai Babu writing from Vijayawada. He has 30 shares of Adani Enterprises at a price of 3,120 rupees. He's been holding the stock for the past 1 year. Sharan, what would you advise? Should he average at this level? At what level should he average? Should he book losses? He's saying that he can wait another year to, come to a price that he bought at.
So Kanishka, on the charts, it's slightly negative. It has given a breakdown below, trading below all its moving averages. But now it's at the support level. It has seen since the last November 2024. So it is decently around the support level of the last 1.5 years. So I would suggest hold on to the stock, but wait for it to consolidate slightly more. I think you can see another 100 odd rupees cut coming in the stock around 2150 levels. And if it starts consolidating around about that level, you can think about averaging. But currently, I would not suggest averaging at this level. Market is also volatile, so you might see another 100 rupees cut coming in. And if at all it starts trading below that 2000 odd mark, I think you should take your stop loss and exit. But again, it's a decently good company, very well diversified. Suggest or hold on to it. It might see just 100 rupees cut more, and then it can consolidate for 3 to 6 months before making an up.
All right, moving on to the next question. This is Sunita Rai, who's writing in from Bangalore. She says she wants the entry levels for Central Bank and Bank of Maharashtra for the long term. Entry levels, Sharan, let me come to you for the levels that she can use to enter Central Bank and Bank of Maharashtra, and whether these are actually a good place to enter at this current point.
So Ankita, for Central Bank, it's an absolute avoid. And even if you hold, it's an absolute exit. Please do not enter this bank. It never contributed to the upside of the PSU banking index. And looking at the chart currently, I think it will fall furthermore. So Central Bank, absolutely avoid. Bank of Maharashtra is still better on the charts. I really like it. It's consolidating. But given the fact that Nifty and Bank Nifty and everything is quite volatile, it is seeing some kind of downside. If you get it around about the 50 odd rupees where it saw good consolidation before making a breakout. So I think if at all you get around the 50 rupees and the 45 odd mark, between that point, I think you can start averaging the stock. And if you see any kind of reversal coming in the Nifty, Bank Nifty, you can start adding onto your position even at higher levels. So wait for that 50 rupees level to start making an SIP. Even if it comes to that 45 odd level, continue a SIP. That is my level for Bank of Maharashtra, but Central Bank is a clear avoid.
Okay, so an avoid call for Central Bank, but those are the levels to track for Bank of Maharashtra. But the next question, Mr. Chokalingam, for you, this is Guna writing from Chennai. This person has 75 shares of Cochin Shipyard at a buy price of 1,618 rupees. They're saying they failed to book profits when the stock hit a record high. At this point, should they book profits or wait for a better, up move?
I would, give a sell call on Cochin Shipyard because even after the correction, it is trading at exorbitant valuation, much higher premium to even a player like L&T. So I would prefer stock like L&T to Cochin Shipyard.
Stock specific queries with our experts. So let's get back to all the queries then. Now, Sharan, this one is coming for you. This is Sandeep. He has a query regarding Bajaj Finance. He has 1,000 shares at a price of 867, nearly around the same price at which it is currently trading. He wants to know whether he should continue to hold or exit at this juncture. What are the charts suggesting?
On the charts, it's not looking that great. Fundamentally, also, it's very expensive, valued around 6 times price to book value at, I think, at a 50% premium to your competitors. So on the charts, I think you can see some kind of breakdown to levels of around 850. That's their 200-day EMA, and also a very long-term support since Feb 2025. So I think you can see some kind of downside. If your price is around about that kind of price at the current price, I think you should exit and maybe start to think to average down between that 825 and 850 levels. Fundamentally, a very decent company, a very good growing company. I think it's the market leader, but valuation-wise, it is slightly expensive. And on technically, it's also looking slightly weak, not that weak. So you see levels of 825 to 850. If at all it comes around about that level, start accumulating it, do a SIP in the stock. And for an upside target of around 925 to 930 odd levels, you can see in the next 3 to 6 months, assuming it comes to that 825, 850.
All right, so that's the view coming in on Bajaj Finance. But let's move on to the next counter. The next counter that is coming in by Bharatwaj, he's writing in from Coimbatore. He says that he has Eternal and he's bought it for a long-term investment perspective for the next 3 to 5 years. Mr. Chokalingam, what do you see for Eternal or Zomato? Now, good set of results coming in. It seems like, the entire competitive intensity that was impacting the profitability. Now, that's probably the worst of it is behind us because the numbers turned out to be decent. Even in the food delivery business, they have been doing well. But for the next 3 to 5 years perspective, do you see what kind of an upside do you see for Zomato?
Absolutely, you are right. Recent time it has improved. It improved its capability as compared to competition. However, my personal view is that 3 to 4 years down the line, that valuation, the growth opportunity is already priced in. I mean, the market is hoping for a big growth in 3 to 4 years time. To a large extent, that's already captured in the price. So my view is that it is better to book profit now and wait for any possible correction to become a long-term investor in this stock.
Okay, so that's the view on Eternal. Mr. Chokalingam, will stay with you. We have another query coming from Praveen, who's writing from Chennai. This viewer wants your view on TCS. He has 100 shares at a price of 3,600. He wants to know whether he should, is it a good time to average for the long term, or do you suggest a sell call for this one? And a query for GAIL and PFC as well. They bought at the peak price and want to know whether they should average or book losses at the current juncture.
GAIL is a good stock for long term. Tremendous capex plans are happening. And because of the tariff and slowdown in global growth, the gas price also would come down. So this company should do well in transporting the gas. Capex is very big for this and diversifying a lot of petrochemicals. So therefore, it's a great stock. And TCS, it's a great company, great management. But one has to understand the structural changes happening in the marketplace for the sector also. The IT sector is not likely to grow in even in strong single digit, forget double digit, even to come back to 8 to 9% growth in dollar term. The revenue is most unlikely for 1 or 2 years. So the wealth creation story is over. So one has to understand this, and yes, it will be a defensive, but whether it can create a significant wealth in the long term, I have a serious doubt. So one can go for stocks like Mahindra & Mahindra or L&T, where at this juncture you have a lot of visibility for the growth. PSC, I have a personal problem after recommending at around 60 to 70 rupees. 3-4 years ago, adjusted for bonus. I'm not in a position to, give any buy call. Because for second reason, compared to NSE, what the price is quoted in the market, this commands an exorbitant premium, I think, which is very difficult to justify. So I would maintain sell call on BSE.
All right, so those were the calls coming in on those couple of stock queries. But let me come to you, Sharan, now for this one. This is Ikam Baria who's writing in from Hyderabad. He says that he has he's been holding Tejas Networks at a buying price of 1,125. He wants to know if he should start averaging in or book his losses. He's a retired person actually, and he wants to keep the stock for 1 year or more. Sharan, really, is it a good bet for the next 1 year? Because Tejas Network has corrected quite a bit. In fact, he's sitting at a good loss. What should he do with this counter now?
So Ankita, I'm very sorry for his loss, but fundamentally, there's a lot of more negative impact on the company, and that's showing on the technical charts. It's an absolute screaming sell to me. I think a lot of big investors had invested. The stock rallied from that 200, 300 odd mark to 1,300 rupees. And from there, you have seen significant high exit, especially in the month of April, where you saw very big exits coming in the company. And that time the stock was trading around your 700 to 900 odd levels. So technically very weak. And I think it can see much lower levels in the coming time. So I would suggest, if at all he has the capacity to bear the loss, do bear it, because I think it's trading around 568. Maybe in the next 3 to 6 months, it'll be trading at 300 odd levels and your losses will balloon. So I think just exit, take the loss, make a new strategy, enter into companies that are doing well and will do well fundamentally in the next 6 to 12 months, especially as Sir also said, auto, M&M, your TVS Motors, and even other maybe PSU banks or your large cap banks. There you might recover some kind of your losses, but Tejas Net is looking very weak.
Okay, so Tejas Networks is looking very weak. But another question for you, Sharan. This is NSS Lakshmi writing from Vijayawada. The viewer has Tata Communication shares, 300 shares at a price of 200. She wants to know whether she should book profits or hold as of now.
So Kanishka, I think Tata Communication is still decent if you compare to other IT players. But again, it's in a consolidation zone. It's just trading in that 1,500 to 1,800 odd levels. I think once this whole thing subsides and maybe the Nifty starts consolidating, we can select some kind of winners that are moving up post all this news and volatility. For me, I think Tata Communication will consolidate again in that 1,500 to 1,800 odd levels. The breakout for the stock comes in above 1,800, but I don't know if it will come in the next 1 month, 2 months, 3 months, or 6 months. Currently, it's in a sideways to a downwards consolidation. So I would suggest, if you have the capacity, do hold on to it, but do put a stop loss in the system of around 1,600 rupees. If at all, at any day, if it closes below 1,600, take your loss and move out and start looking for other sectors.
All right, so that's the view on Tata Communications. But weeks after layoff of 2% of its employees, TCS has now confirmed that it will hike wages for about 80% of its workforce with effect from September. My colleague Sumita Karir is joining in with the details of that story. Take it away, Sumita.
Absolutely, Ankita. So TCS has confirmed in a statement to ET Now, where it will be undertaking wage hikes for at least 80% of its employees. In fact, these wage hikes will be effective starting September 1. In fact, that email, which was sent by the company CHRO Milind Lakkar, has been accessed by ET Now. And let me quote from that email. TCS says, and I quote, "We're pleased to announce a compensation revision for all eligible associates in grades up to C3A and equivalent, covering 80% of our workforce. This will be effective 1st September 2025. In fact, the hikes will be rolled out for junior to mid-level employees. Now, there's been no clarity on what the exact plan of the company is with respect to the rollout of these wages or what the quantum of these hikes is going to be. But that's what we're picking up so far. And of course, TCS in a statement to ET Now has confirmed the same as well. Why this is crucial? Well, this is coming in just a couple of days after TCS announced layoffs of at least 12,000 of its workforce over the next a couple of months. Essentially, by the end of this financial year, there have been headwinds as far as the tariff situation in the United States is concerned. There is geopolitical disarray, which perhaps is also weighing down heavily on IT sectors demand, client spends, and of course that might also be reflecting on the overall revenue output as well. And of course there are AI-led redundancies as well, and this is something that TCS also mentioned in a statement after it announced the decision for layoffs. Another interesting point is the fact that just a couple of days before that layoff announcement was made, TCS stated that it had not taken any decision on hikes. So this is definitely some relief coming in for employees with this wage hike effective September 1.
All right, thank you, Sumita. So some relief coming for TCS employees after that layoff announcement earlier. Thank you, Sumita, for getting us all those latest updates. But moving on, let's get back to all the queries that we were answering then. We still have Sharan and Mr. Chokalingam with us to answer all your stock-specific queries. So next query is coming from Bangalore. This is SK Saran writing in. Mr. Chokalingam, he wants to know whether he can buy gold-related stocks at this juncture, and if he can, could you suggest some picks and what would be the good levels to enter in gold-related stocks? What's your view given all the tariff uncertainty that we are seeing, and especially when it comes to auto and pharma and chemical and all of these names? Do you think it's a good time to enter into gold-related stocks?
Economics, if you logics, if you go by that, the gold-related stock should not be a beneficiary of rising gold prices, because obviously, when gold prices become exorbitant, there will be a slowdown in the gold demand, which is already visible. Even as per gold, associations, there are signs of slowdown in the demand for gold. So what would benefit is directly buying gold would be a better option than, buying stocks which are using gold as an input. So therefore, I would suggest, buying gold ETF rather than, gold-related stocks. Of course, we don't have any gold mining companies in India. Otherwise, the gold producer would be the best, option. In the absence of that, one can consider gold ETF.
Right, so gold ETFs are the best bet as far as the gold space is concerned. But on that note, we're completely timed out in this edition of Buy Now Sell Now. Sharan and Mr. Chokalingam, thank you so much for taking the time out and answering all the questions. But with that wrap, Kanishka and I will take your leave. Thank you so much for tuning in.